All right, hello, good evening, ladies and gentlemen. All right, this is I'm Possible Terence, and let's get our Friday Facebook Live session started. All right, now, so it's another week of Facebook Live together with all of you, and thank you very much for coming back and joining me once again. All right, so let me drop a couple of hello notes over here. Hello, Jimmy. All right, thank you very much. All right, and then hello, Jason, as well. All right, and then Mei Ling. All right, now, so good to have all of you here as well. All right, and if you're here with us for the first session, right, and for the first time, all right, it'll be nice for you to drop a note and let us know this is your first time being with us. All right, hi, Chong, hi, Anthony, hi, Desmond. All right, now, so once again, all right, if you're joining us for the first time, okay, please, all right, now go to this link that you see on the banner right now, right, streamyard.com/Facebook, right, you will be brought to a pop-up page, but you'll see the Facebook button and the logo, right, just click on it, all right, this will allow us later on, all right, where we are running the sessions, right, and you're leaving a comment or you want to ask a question through the comment section, we will actually be able to see and know who's leaving the comments. Yeah. Right. And for me to address you personally, all right, I prefer to do that rather than call you, all right, a Facebook user. Okay. Now, so this is due to the backend system, and I just wanted to get it out of the way. All right. And now that is out, let me remember to remove that. All right. Now, so next part over here is this. No, I removed the wrong one. Oh my goodness. All right. Now, yeah. You see the scrolling banner at the bottom of the screen. All right, now during these sessions, I will be showing you how I plan my live portfolio, how I build it for cash flow. All right, the investment perspective is always there. That means I look long term, right, but I sell shorter to generate cash flow and income for my portfolio. Now, so many of you who are joining me may always ask or have this question mark in your head, Terence, how are you different from all the others? Right now, as an option seller, all right, I am a cash flow driven investor. All right, I do not seek so much when it comes to capital gains. All right, why? Because I seek control. All right, now capital gains is always about buying potential stocks, but you can never ever guess, all right, how much returns you can get. So it's always unpredictable. All right, if you hit it, it's pretty much like hitting a jackpot. Yeah, all right. But when you become an option seller, remember this, right? We start to function exactly like insurance companies. So if you look at any insurance company setup, right, they take care of everything. They take care of the risk in their business so that they maintain profitability. They take care of the customers that they sell to so that they get the right customers that allows them to make profits. All right. Okay. And they're always in control. Yeah. Okay. They always have the last shot and the last say. Now, that's what we get as an option seller as well. So using those controls over here, right, I get to pick the stocks that I want to trade on, right? I get to sell the options that I want to sell based on those stocks, right? I get to enter the trade when I feel that the stock price, right, is absolutely fantastic. See where we get all the controls over here. Right now, so on this Friday section, right, if you're joining us new, right, let me reiterate again, right, that we are only picking what I classify and what I call the right stocks. Right, the right stocks are pretty much profitable companies. Yeah, okay, but selling at a very, very dirt cheap valuations. Right, what are valuations models? Right, we will cover it whenever we seek a new trade on a particular stock. So if you want to find out more information, please stay tuned, or please make sure you keep coming back, all right, so that you can pick up all these little golden nuggets. I promise you one thing, right? If you come back every Friday, right, maybe some of the members can comment over here, right, and help me out. Yeah, okay, if you come back every Friday, there will be little somethings, right, that you will take away, all right, that will make you a better investor or make you a more knowledgeable and more informed investor, right, just by listening to me and coming back here every single Friday, right? Why? Because, right, this is no nonsense, no fluff, right? I seek only trades that I'll use my money on, which you will see me place in my own accounts. You'll see me manage them after that, all right? And we will verify them during the session before we record them, right, on the screenshots that not this is not a screenshot, on the Excel file that you're seeing over here. Yeah, okay, so these are not trades where I made them up. These are trades that have entered my accounts, right, and verified by all the attendees who are here with us. Yeah, okay, all right, now, so Elaine has a question over here to kickstart. All right, now, Elaine, what kind of portfolio size can we do this? All right, now, Elaine, my model portfolio that I use on every Friday Facebook live sessions. Yeah, okay, during these sessions, we are targeting the general public, right? So if you're a trading member with us, right, you have a different advantage. Right, we have a slightly different portfolio, tweaked for a much smaller capital, for a much smaller size. We teach you how to optimize that. We teach you when to manage that in a more active manner to drive higher returns. Right, but on Friday session, I just want to take simple steps to show many of them out there who are even new to investing that it doesn't have to be hard work, right? And it doesn't have to be hard work, yet you can drive better than average normalized returns. So what kind of average are we looking for? Right now, we started this journey more than, I think almost coming close to 1.5 years or 2 years. Our first goal was just to set a 20% per annum target, right? Okay, but many people, right, didn't really latch onto it or couldn't really tell, because a lot of investors look from a dollar point sense, right? So during this period, right, we started this new portfolio or directive, as we would say, right, only in May 2022, all right? And coincidentally, that was the start of the bearish market. So we started this portfolio in many of what would people say, right, as the worst possible moment, right? But there's good news, right? There's always good out of something bad. Yeah, okay. And the good news is this: for the last 2 months running, all right, we have been hitting our cash flow target. All right. So what's our cash flow target? So for this $100,000 capital portfolio, right, we are looking to generate about $2,000 every month. Right. So how have we done? All right. Let's do a quick recap over here. All right. We started in the month of May. All right. And our first trade was only entered on the 22nd of April. Now, so some of you might be confused. Terence, you say May, but your first trade is 22nd of April. Right now, when we say the monthly targets, they are all set, right, on the monthly expiration, right, of that month's options, right? So when we say May over here, we are pretty much selling May options, right? And that's why it's considered May cash flow, right? So we'll always do this month to month. Yeah, okay. Now, so for the month of May, we generated 2,294, right? Okay, and then for the month of June, right, we generated 2,218, right? So we basically surpassed, right, our goals for the last 2 months. We made about what, close to 2.3% for the first month, right? And then we followed up by another 2.2%, right, for the second month after that, right? And all this during a much falling market, right? Why? Because during this time, right, the S&P 500, right, literally fell by about 600, right, points or so, or maybe even more. Yeah, okay, I kind of forgotten over here, and we still did well. All right, okay, now, so Elaine, if you really need to know this, all right, you can also practice this if you realize, right, by half sizing all the quantities that I'm doing over here, right, you will need half the capital. Yeah, okay, all right, half the capital. Hang on for a moment, everybody. All right, okay, now, sorry about that, I'm back. All right, now just need to get a little bit of water into the system. Okay, all right, now, so back over here, sorry, Elaine. All right, now, so you can half the size of the portfolio and do all half of the trades. Okay, but if you think about it, all right, you can also try to 1/3 it, all right, and look at about 25 to 30,000 capital, all right, and 1/3 the size that I'm trading over here. All right, so that's all flexibility, that's all possible. Yeah, okay, but I can't really go into that extent or that detail, all right, okay, during a 1 hour session like this that we do in fact, it's almost half an hour to 1 hour session, which we do, right, on a week-to-week basis. Okay, hope you understand. Okay, but if you do have interest over here, all right, pardon me and I apologize in advance, all right, if you're already a trading member with us, all right, so you can consider one of our mentorship programs, okay, or engage, with us, all right, and be one of our trading members, okay, and join me and my trading partner, right, for live trading sessions every week. All right, now for all our members, we conduct up to 100 live trading webinars in a year and actually more. All right, so we are definitely one of the investment community, right, that literally work the hardest, right, for all our members. Yeah, okay, all right. We believe in trading with all of you. Why? Because almost every single week, market is dynamic. Market keeps changing, right? So if you have a mentor by your side each and every week, right, it'll calm you down. It'll show you what you need to do, right? It'll show you the skills that you need to have to navigate these markets. And it's actually more important right now. Okay, because during falling markets, many people scream and run to the shelters, but you shouldn't, right? It's during these times where you should learn, right, and upgrade your skills, right, so that you can learn and figure out how you can still make good trades during this moment. Okay, all that said and done, let's get to our market updates, okay? All right, now, so having said all that over here, right, let's get to our first segment of the day, which is to cover what I see and what I think about the markets, okay, and what it has been doing. Okay, and after that, all right, we'll look into the portfolio, right, and follow up by seeing if we'll do any trades for today over here. All right, now, so heads up. This is the SPY chart. Now, sorry. So for those of you who are joining me new over here, all right, what is the SPY? It is pretty much the stock version. Okay, listen very simply over here. It is the stock version of the entire S&P 500. Yeah, okay, all right. So it comes in the form of stocks, all right, okay, and you can actually buy or sell this particular stock, right? But it mimics the entire S&P 500. Okay, now how does it mimic? Right, it is 1/10 the size of the S&P 500. So if you see over here, it's about 374.34. Okay, and over here, if I pull it out, you can see that the SPX is about 3755. Yeah, okay, all right, now, so it's a little bit close enough, right? Now, some of you will be asking, Terence, but it's still different, because if you take 1/10, this is about 375.6. Terence, that's almost $1 difference. Why is there such a big difference? Simple, supply and demand, ladies and gentlemen. Yeah, okay, all right, this is not tradable. This is taking the average of all 500 stocks. But this, right, is down to human nature, human psychology, right? That means that people are telling you they are more fearful, right? That's why you see these prices actually lower, right, than what the index is doing, right? That means, all right, many more people are selling this index, right, than what the index is presenting right now. Yeah, okay, all right. So that's a way of reading the SPY, right, versus the S&P 500 by itself. Okay, now next up, right, looking at all these lines that are driven over here, drawn, not driven. All right, okay, looking at the lines that have drawn over here, all right, you should have realized that these are what we call formulations of like roofs and floors on the particular stock price movement. All right, and if we are talking about where we are right now, ladies and gentlemen, all right, where are we again? All right, would anybody like to leave a comment? Are we looking bullish or are we looking bearish right now? Oh man, nobody? Or am I lagging that badly? All right, awesome. All right, now, so Stanley, all right, thank you for leaving a comment. All right, but I do have a Facebook user. All right, now, so if you're belonging to the first person who leave a comment and Facebook user, please go over to streamyard.com, yeah? All right, now, so very clearly over here, we have this downward channel, all right? We broke it. We made an attempt to run. It failed, all right? It failed, and now we are back, all right? And then it made a false break again the other day, and I said, all right, the next day was going to be decision day for the market. Right, and right, the market decided to come back in to the channel again. Right, so it failed the horizontal resistance line, it failed the downward channel resistance line, right, and we are back inside this channel. Right, so why do we say it's bearish? Simple, right? You realize that now inside this zone, right, we really don't have any form of support. There's no form of support until the last low, right? And the last low is actually about 3,620. All right, now, so we are at least about 150 points away. All right, now, so the market can easily fall 150 points, right, without batting an eye. So that's all possible. Right, now, on top of that, right, if it breaks this support, right, and makes a lower low, right, now the low can actually go all the way, right, to up to 3,500. Yeah, okay. Now, so many of you like to ask this crystal ball question, Terence, right, where do you think the market can fall to before we really see a rebound? Right, don't put me on this. Right, but if you really have to force me to look at a number, right, I honestly think, right, the interest rate is not done, right, which means, right, the Fed has to raise the interest rate, right, at least 2 to 3 more rounds, right, and bring the interest rate hike, right, to near to 4%, right, before inflation is controlled, right, okay, and if it raises to 4%, that means the market can literally fall as much as what it did before, yeah, okay, but considering, all right, that people have already absorbed most of this fear. So I would say, all right, we can easily hit about 3,000 to 3,002, right, before the market is really done selling. Right, now, when I say it's done selling, it doesn't mean that we will not get bounces. We will. Okay, but what I'm saying is, right, you should not get overly bullish, right, until, right, the market is flushed out. Yeah, okay, now, so another way to look at it, all right, it's also this. All right, let me see if I can pull this up. I don't use this very often, so I think I forgot which one is it. Yeah, I believe it's this one. There we go. All right, now, so if you look at the volume profile, all right, now volume profile pretty much just tells you, all right, at which price level, right, how much of the stock is being traded. Right now, so if you look at this over here, right now, there isn't really much volume, all right, on the break, and that's why you see that it was hard to push any higher, right? And then, all right, there isn't much volume on the downside as well. So that also tells you that we don't really have much support over here. Yeah, okay, all right now. So that's why the market looks and feels very vulnerable at the moment. Right now, the next thing, earnings season is going to kick off in about 2 to 3 weeks from now. Okay, all right. And if you've been looking for an exciting strategy that makes short-term quick gains, right, but yet produces some high success rates, right, or right, how you can minimize losses and turn losing trade into winners, right, we will be conducting, right, another dedicated mentorship, right, on the upcoming earnings season, right. So if any of you would like to grab yourself a slot, right, or come on board onto the introduction session that we especially arranged, okay, I'll show you some of the ways of how we have updated the way we trade earnings to bring an even better performance, right? Why do I say this? Because for the last earnings season, right, we literally had no losses at all, right? Why? Even because when the earnings were wrong, right, we were able to recover all the losing trades and turn them into winners. Yeah, okay, so for the entire season, we were not looking at any losses at all, right? Now, so if you'd like to find out how we tweak the strategy to achieve such a feat, yeah, okay, do make sure you come on board on our final introduction session. Yeah, okay, now, so if any of you are interested, stay until the end, right? Because I will put up, all right, the special registration link only at the end. Okay, I don't want to take away the limelight, okay, of the main dish of the session over here. All right, so please make sure you stay until the end, okay? All right, now, so that's done, right? Let me take it out of the picture. So for now, right, we really still have to be patient. We really still have to be defensive. Yeah, okay, now, I really feel, right, that this selling over the last few days has been a little bit overdone, right? And it's coinciding, right, with the end of half year, which is the end of the quarter, right? So if you realize when the market opened yesterday, there was heavy, severe selling, right? And then it bounced after that. Why? Because it was portfolio dressing day. No portfolio manager, right, will be left with any ugly performing stocks in their books, right, before the end of the day. They will liquidate everything, right? Even if it means big losses that they're going to absorb, they will liquidate everything. Why? Because for the end of half year, they've got to come out with a report of their portfolio holdings. So if they decide to keep the stock, they have to show that they have lost 20, 30, 40%, right, on this stock that remains in their portfolio, right? So that's why by hook or by crook, they were going to get it out of their books yesterday. So it was pretty much like a fire sale when the market opened, all right? And then it recovered after that, yeah? Okay, now, so that was pretty much what happened yesterday, right? But for today, it's the first day of the month, all right? Market is indecisive at the moment, yeah? Okay, but let's see what it wants to do before the end of the week. Because the end of the week, all right, will also give you a glimpse, right, of how traders feel. Are they still really fearful? They don't want to hold trades over the weekend. Why? Because next Monday is also a trading holiday. So it's a long weekend in America. Yeah, okay, because 4th of July is Independence Day. Yeah, okay, so markets are closed. Yeah, okay, so it's pretty much going to be a long weekend over here. So that will actually make traders a little bit jittery. Yeah, okay, should they be bullish? Should they be bearish going into a long weekend like that? Yeah. Okay, now, so that is out of the way. Let's get to our portfolio checkup. All right, let's do a doctor's checkup on our portfolio. Should we panic? Should we cry? Should we laugh? What should we be doing? All right, now, so, Timmy, if you want to do what I did just now, all right, you might just want to have to replay, all right, the live version, okay? All right, or look under this set of indicators. It's called the volume profile. All right, it's pretty much just called the volume profile. All right, now, so over here, all right, now let's look at our July portfolio over here, ladies and gentlemen. All right, now we still own 2 assigned stock positions. And of course, Intel doesn't look pretty today. All right, so let's get these 2 positions out of the way first, okay? Now, so Intel. All right, so Intel is down. Where is my Intel here? All right, Intel is down by $1.35. All right, now why, Terence? Why is it still dropping? Why is it still crashing like that? Simple. Because Micron announced earnings today, right? And Micron's earnings, right, was decent, but it gave out a warning, right? A bleak warning, all right? So Micron is also in the same, kind of like in the same industry. Yeah, okay, so everyone falls together, all right? But never ever forget, right? Never ever forget that Intel is already trading at almost 5 PE. All right, and at 5 PE over here, that's really dirt cheap, ladies and gentlemen. All right, that's like dirt cheap, right, for a very, very profitable company. In fact, a company, right, that you will never see showing you a losing money quarter. All right, okay, so that's really, really rare and hard to come by for such an investment opportunity. So if I haven't gotten in, I would definitely find something, right? But because, this is called prudent management, okay? Now, because based on the stock ownership that I have, which is 500 shares, right? Okay, now it cost me $21,000 to own these shares, right? And that's about 20% of my portfolio, right? So I'm not about to expose any further, right, on my portfolio based on this particular stock. All right, okay, now if I was underexposed, I would definitely be happy to add more. Okay, but definitely not now. Okay, definitely not now because I'm already exposed 20% of my portfolio on Intel, right, and 20% of my portfolio on WBA. Am I comfortable? Yes, I am. All right, from a fundamental perspective, I'm definitely comfortable. Right, and that's part of making sure that you have done, right, this particular strategy or you built this particular portfolio well. Right? Why? Because you cannot control the markets, right? But you need to be prepared for the wrath, right, of Mr. Market, right? And Mr. Market is basically showing the wrath on these two particular stocks, right? If that's a very difficult word, is the fury, right? Unleashing the fury on these two stocks, yeah, okay? But you remain comfortable, right? That's the key over here, right? Now, so I could afford the stocks. Basically, I allocated the amounts I needed, right? So now, pretty much for Intel, right, I'm just sitting and waiting. Yeah, okay, I'm just sitting and waiting. My cost basis of a share is about $42. So I need the stock to bounce by about $6 from here. Is it difficult? No, it's really not. All right, all you need is one good day from the markets, or no, maybe one good week from the markets over here. All right, so what's one good week for Intel? Suddenly, some big fund manager decides to scream that Intel is too cheap. All right, he's going to load up. All right, and trust me, the rest will follow suit. Yeah, okay, all right, all we need is something like that. Yeah, now next one. All right, next one is WBA. Right, so we sold and added a call option, a $45 call option on 24th of June. That paid us $175. All right, so where's the stock right now? Let's have a look. So the stock, right, it's also down, right? It's at 37.54, right? So I'm pretty sure there are 42.50 calls. As you can see over here, right, it's literally almost worthless, right? I could close it by paying 4 cents, but then, right, even closing it today, right, I can't sell anything after that, right? So I might as well just keep it, right, and keep the extra $4 for each option, all right? Okay, I mean, no trade over here, right? So I'm just gonna hang on to it, right? So no managements on these two positions, right? We're just gonna keep it, right? So nothing to be done over here. So let's get to our portfolio puts now, all right? So our first one, a GPS portfolio puts for 15 July, $10, right? Where are we sitting now? GPS. Right, we laugh, we cry, it bounces, it stays where it is, right? And it's pretty much still where it is right now. So GPS, right? Now we're looking at an $8 stock right now. Okay, on a good day, right? It can bounce, right? We'll be back to where we are, right? So if you see over here, right, it did bounce and it went to 950, right? So that was close enough before the next market sell-off. All right, so now when the market's recovered, all right, okay, this is definitely one stock, right? That's too cheap, all right, and will be enjoying a bounce. Okay, now, so I'm comfortable with this stock as well, so I'm fine with it. Next one, all right? I believe the next one is going to be ANF. So ANF right now is trading at 16.65. All right, so let's have a look. 16.65. All right, we have an 18 put over here. All right, so if anything happens over here, all right, we will take assignment of the stock. So I will be left potentially, okay, if we look at it today, potentially, all right, I will still have to pick up another 2 more stocks. Yeah, okay, another 2 more stocks. All right, so I won't be managing them. I'll be holding them for now. All right, next one. All right, Harley Davidson. All right, we have a $31 put option. So how's that sitting right now today? All right, Harley Davidson. All right, this is still considered safe. All right, it's 31.44. All right, so we'll hang on to this position because I bet you it's still going to be pretty expensive. $1. All right, so it's costing about $1. And that means our trade, right, is still losing money. So I'm not going to close it. I'm going to hang tight on it. Okay, now some of you may be wondering, but Terence, the market is falling. Why are you still holding on to all these puts? Right? Aren't you scared? First, right? You must remember the fundamentals. Why did I trade them in the first place? Right? It's a strong brand. Right? It's a strong profitability nature to the business or nature to this particular brand. Second, it's trading at 7 PE. Right? How many profitable stocks at this moment, right, can you actually find in this market that's trading at 7 PE? Yeah, okay, all right. Now, if I can buy this, right, I will buy it and I'll just leave it there. Yeah, okay, markets will always come back. Remember, right, the whole market game is about buying low and selling high. But buying low also ensures that you need to buy fundamentally strong companies. So we have great fundamentally strong companies which are cheap right now, but I don't want to own the stocks. I choose to sell the puts instead. So if I actually end up buying them, I'm actually ending up buying at an even cheaper price. So I'm okay with that. Yeah. Okay, so I'm hanging on to the hawk position, so no management. Let's go on to the next one. VZ, right? VZ, $50 put option for 15th of July. So let's go. All right, so VZ over here, right? $50 put option. So this is also safe, right? This is a safe trade over here, right? So it's about what, 70 cents? Okay, worth about 70 cents, right? So we're actually profitable on this one, all right? But I'm good with the stock, so I'm going to hold on to it. Yeah, okay, I'm going to hang on to the position. All right, now next one, PayPal. 72.50 puts for 15th of July. All right, let's go now, PayPal. I'm pretty sure we're bleeding. Yeah, okay, but we're not too bad. Yeah, okay, PayPal is sitting at $70. All right, now if we get a good move from the market, it can easily bounce. So I'm not worried about it at all. Yeah, all right, so I'm good with that. All right, I have no worries. GPS. Okay, now EL, you're not wrong about that. Okay, but I believe that there's an error around GPS number that you're seeing over here. Right? Why? Okay, now if we go back to the charts over here, right? So sometimes when you see that something does not tally up, right, it'll be good on you, right, to actually run the numbers. So if you see on the screen right now, I'm loading to you, right, the last 1 year of GPS. So let's see if they're actually making profits. So GPS made 70 cents, 27 cents. So that's a total of 97 cents, right? Okay, and then they lost 4 cents over here, and then 44 cents the last quarter. So first up, EL, is this company still profitable for the last 1 year? They are. So if they're still profitable, that means that the PE cannot be negative at all. Yeah, okay, shouldn't, all right, okay, and it won't be, all right? So if we really have to work out the PE ratio number, let's do it now, all right? Let's take this as a practice. 0.7 plus 0.27 minus 0.48. That's 49 cents, ladies and gentlemen, all right? So if we take 831 divided by 0.49, that's about 16 PE, all right? Okay, slightly higher, okay, but when I entered it, it was only about 8, about 8 PE. So I'm stuck with it, right? The company's still profitable. Yeah, okay, I'm okay with that. Right now, this company is still trying to sort out its inventory. It's trying to sort out the logistics issues, right? Okay, with shipping out their products, right, from China. Yeah, okay, so once it gets it sorted out, yeah, okay, I'm pretty much fine with it at the moment. Look, yeah, I'm down on the stock. I don't admit it's a bad position right now, okay, but I'm comfortable holding to the stock because I believe that the branding is strong enough to create a bounce. Right, so once we get a bounce on the stock, right, you know how we work this portfolio. I'm not hanging on for capital gains. Right, once we get a bounce, we make money on it. I'm getting out over here. All right, so I'm okay with it. Right, this company is not like going bankrupt anytime soon. Yeah, okay, so definitely I'm not worried about it right now. Okay, all right, now so I'm holding on to that. Yeah, okay, and let's see how it brings us. Right, even if the stock drops another 50%, then this is a real portfolio. This is a real trade. Then, I'll cough it up, I'll own it up and take a bad position. Okay, but I really believe that it won't. All right, so let's see if my experience plays out, yeah? All right, now, PayPal, no actions over here. All right, let's go to our last trade position, which is target. All right, target, 135, all right? 135 for 15th of July. All right, we got it for 202. Let's see where it is right now today, target. Here we are, 140. All right, so it's good, strong, and holding firm. All right, okay, the premiums are still really rich. All right, so I'm not going to be doing anything with it. Yeah, okay, so staying put. So the portfolio is pretty much docile. All right, we're pretty much docile in the portfolio. All right, now, and looking at this right now, okay, be ready to start typing a comment, okay, because I'm going to ask all of you a question. All right, and the question is this. All right, we have 1, 2, 3, 4, 5, 6. 6 options position. Right, and out of these 6 portfolio put options position, right, let's run a risk test today. All right, how many of these trades are on course towards me having to buy the stock? That means how many of these portfolio puts do you think, right, I will be assigned on and have to actually own the stocks as well? Right? You can type the number over here in the chat box. Sorry, in the comments. Right, so EL says 5. That's a little drastic. Yeah, okay, but that's okay, right? Because target is safe, right? VZ is safe, right? Okay, and hog is still safe as well. Yeah, okay, so I would say about 3, but let's overstretch it a little. Let's put 4. Okay, let's put 4 right now. So if we put 4 over here, right now, I want to show you this, okay, of why I said the way I design, right, how much allocation I give to building such a portfolio, right, will actually keep us out of danger. Yeah, okay, will actually keep us out of danger, right? Yeah, don't worry about it, all right? We'll witness it 2 weeks from now. Yeah, okay, let's put it to the test, shall we? All right, I believe 3, all right, or maybe even lesser, right? But you're not wrong to believe more, okay? But I just want to show you, all right, this, ladies and gentlemen, right? Even, if I have to swallow up all of it, right? Okay, that means all my positions, if I have to end up buying all of them, right, as stocks, okay, on the 15th of July, right? Can all of you look over here on the screen, right, and tell me, right, how much capital will I demand, right? That means how much will they demand in capital, right, if I have to buy all the stocks? What does that mean? It means for a portfolio put, we only allocate 70% of the total requirement. But once it becomes a stock, I will start allocating a full 100%. Yeah, okay, now, so if you see all the positions, these are all portfolio puts, so they demand 70%. So if I assign on all of them, all right, okay, I'm telling you right now, okay, that I will need the full 100%, right? If I put up the full 100% over here, let's see what's the total sum. Right, what's the total number over here? 123,000, right? So first question, right? We have built cash flows for 2 months, right? So how much is our portfolio worth right now? 104,000. All right, okay, 104,000. Next. All right, now, so based on this, how much over, all right, have we traded on our portfolio? All right, how much over have we traded? All right, leave a comment, type it out. I promise you, this is a very, very important learning point. All right, for any of you who gets what I'm trying to show you, okay? 20%, thereabouts. Okay, 20% thereabouts. Okay, now, so next up over here, those of you who are familiar, all right, okay, with investing, okay, and familiar, all right, with having margin accounts, right, with the brokers. If my account has $100,000, if my account has $100,000, right, how much money will the broker be willing to loan to me to buy stocks? All right, can all of you tell me? Right, Tanya, right, 104,000 comes with the addition of the last 2 months cash flow. Okay, don't worry, I didn't pull it out of the thin air. Okay, I just added the cash flow that we made from the last 2 months. Yes, Jimmy, double. All right, yeah, I don't know how you get 25,000. All right, okay, but the broker is always willing to lend you 50% of the cost of the share. So if you actually have 100,000 in your account, you have 100,000 to trade options. But if you look at the stocks, you would have 200,000 to trade stocks. Now, so if I can get a total, right, of 200,000 on my account, and now after being assigned, I need 123,000. Right? First, most important question: is my account still considered safe? Right? Is my account still considered safe? Right, leave a comment, yeah? Thank you, Yale. All right, now, yes, I've started borrowing. Yes, I would have to pay a short-term loan interest until I close the positions. Yeah, okay, but I'm in no trouble. Can you see now? All right, and my next question, right? Out of the last 10, out of the last 20 years, how many times, right, would I be in such a situation? Not very often. In fact, very rare. So on such a rare occasion, if I'm liable to pay interest for about maybe 1 month, let's say, right, for the market to bounce a little so that some of these stocks will get out of trouble, right? Okay, is that considered very costly? To me, it's not. All right, to me, it's not. Right, and here's the best part. Right, we did say not all the positions are risked out now. So let's say, all right, if my target stays as a portfolio puts, right, so it doesn't end up in trouble. All right, okay, now, so on expiry, that means you expire worthless, right? So it's gone. All right, and let's say our Verizon, right, expires worthless as well. Having a look at that, yeah, okay, let's say if you assign 1, 2, 3, 4, right? Okay, so 4 more, okay, on these 4. Have I busted my account yet? Right, so I'm only assuming that Verizon and Target expires worthless. Yeah, okay, have I busted my account capital? Right, Andy, I'm not talking about technicalities. I'm just trying to show you the worst case scenario, because many new investors are always interested in fighting me out with the worst case scenario. Terence, you shouldn't do this. Terence, you shouldn't do that. Yeah, okay, I'm trying to show you what I've gathered over the last 10 and more years as a trader and selling options, right? How I can over allocate, how I can squeeze those extra juice, right? Okay, based on my strategies, right, and still remain safe. Yeah, okay, all right, now, so I didn't bust my account, ladies and gentlemen. So can you see? All right, because when I start using leverage, right, so many times I have people coming to me, Terence, right? No. All right, as long as you use margin, that's risky. All right, you're gonna end up getting dead. All right, you need to remember one thing. All right, we use loans, we use margins all around our life. All right, if you don't believe me, are you buying your property with full cash? How many of you have paid up fully for the house that you're living in right now? That's a good question, right? All right, you found the answer. All right, does it even make sense for you to go ahead and pay up the house right now? All right, it's your choice. Okay, but you can obviously see if you take the right amounts, all right, you're not risky at all. Right? In fact, you're leveraging, right, on cheaper capital to do so much more. Right? For example, right, based on this portfolio, okay, let me ask you another question. Right? On the home loans, okay, on your home loans, right, how much interest are you paying? I'm not too sure about yours, but for mine, right, I'm paying lower than 3%. So if I'm building this portfolio, if I'm making 20% per annum, all right, does it make sense for me to take that cash to pay off my property, right, versus using the cash to generate 20% each and every year? It's a choice, right? Because if I use it to pay down the house, then I would have less capital to put it to invest. You see where I'm going now? Yeah, okay, so your job is to make sure that you keep that capital safe, right? So with this worst case scenario, I'm actually trying to show you, right, that if you build your portfolios right, you're able to withstand the worst that the market can throw at you. Yeah, okay, right now. So that is out of the way over here. Right now, let me have a relook. All right, we are right now to the hilt, about $99,000. So I don't really want to add on. No, I don't really want to add on any more positions. Yep. So for tonight over here, right, ladies and gentlemen, we're staying put. I would love to add some positions because I do feel that the market has some great bargains out there, right? The bargains to generate great cash flow, but from a portfolio safety angle, no, right? No more deals, right? But despite no more deals, you must understand, ladies and gentlemen, right? Even if I have to own all these stocks, right? Even if I have to own all these stocks for this month, right? We have still pocketed a total of $2,800 in cash flow. I'm a happy camper. Right? At least I would have still achieved the goals for this month. Right? But you may be saying, Terence, how about next month? Who knows? Correct? Don't assume the worst, because markets, right, always have the ability, right, to prove people wrong. Right? So yes, this month may be the worst, but next month, right, I could still well enough achieve my goals and my target, right? Because I've got 4 weeks to get it done. Yeah, okay, I've got 4 weeks to get it done. Yeah, okay, so don't underestimate the performance, right? So once again for today, right, no actions, right? If I disappointed you, I apologize, okay? But, okay, my job is to keep the portfolio safe, right, and stay on course, right, to achieving my monthly goals, right? So if you want to see if I can get this done, right, please make sure you come back, All right, please make sure you also come back on the 15th of July, all right, to make sure you can justify me, crucify me. Let's see it, okay? Yeah, all right, okay, I'm more than happy to do that. Now, so I did promise all of you over here, if you stay until the end, this is, sorry, this is the link. Okay, this is the link, ladies and gentlemen. All right, we are running a one-time only. So this is only a one session, okay? All right, for the upcoming 24-hour earning season. All right, so the 24-hour opportunist trader. So many of you realize we don't call it an earnings trader anymore. No, we call it an opportunist trader. Why? All right, because now using this recipe, right, and adding on my trading experience, right, and the volatility nature of the market, all right, okay, I'm going to show you how you can trade earnings, right, even in a much safer way, right, where hits, we're correct, we make explosive gains in just one day, right? So you may ask, explosive gains, Terence, how much is that? You're looking at about 20, 30, or 40% return gains in one day, all right? But Terence, what if it's wrong? You have losses? Yes, we have. But then I'll show you a technique that apply, right, where we help our traders, where we help our students recover on those losses, all right? Okay, because you make a losing trade, but you recover those losses, that means, right, the bad trades doesn't make you lose money. And all the good trades will end up giving you profitability. So did you make profits then? Yes, you did. All right, now, so that's why we call this an opportunistic trader. How do you find these opportunities? All right, okay, I will be teaching you, all right, okay, when you come to the introduction session itself. All right, so if you're interested to find out a good, dedicated trading mentorship program, right, at a low cost, right, this is your takeover here, ladies and gentlemen. Yeah, okay, if you want to start grabbing some returns in the markets, right, it's a one session only. It's going to be on the 12th of July. Okay, it's a Tuesday at 8 p.m. Singapore time, right, and this is your registration link, right? So please make sure you go to the link right now. Okay, I'm giving you a shortened link. It's called bit.ly/caps, all right, Friday live, all right, Friday live. Yeah, okay, now, so if you have friends who might be interested, share with them this link as well so they can come on board. Let them listen and let them decide on their own, okay? All right, now, so thank you very much for joining me once again. And before you leave the session, if you enjoyed something today, if you learned something today, please hit the like button. Please help me share it out. All right, and I'll be seeing all of you in the next Facebook Live session, okay? All right. I'd like to give you a heads up as well. There may be a schedule clash next week. So if I'm unable to do a Facebook Live session, I apologize in advance. But if there are any trade actions or trade updates, I will be posting it out like how I've done before. Okay, but I will be doing the 15th of July session with you. All right, so that's the killer. That's the exciting one, right? Where all of you can come and crucify me, yeah? All right, so let's see. Let's see 2 weeks from now when the options expire. All right, so thank you very much, ladies and gentlemen. All right, have a great long weekend from the trading of the markets. Relax yourself. All right, and I'll see all of you in the next Facebook Live session, okay? All right, bye for now. Thank you very much. Have a great weekend.